Hello, welcome to this channel. My name is Jacob. I'm really excited that you stopped by on this video to listen to me talk. On this channel, I talk a lot about emerging markets, and this is through interviews of some extraordinary people that I've been fortunate to meet or just have some connections through my network to talk about the experience interacting with people in emerging markets or actually starting businesses in emerging markets that are doing really well. We also have researchers like Afusa Ojimo, who is one of the lead researchers at the Christianity Institute. And, he was graceful enough to stop by on the podcast and talk about his book, Prosperity Paradox, but also some of the exciting things that he's doing. One of which is starting a boot camp where he's going to apply some of the concepts within the book, Prosperity Paradox, for entrepreneurs in Africa to start applying them, but also building companies that will last for many generations to come. Also, and this is the first episode, I want to talk finance, right? And something that I think would be very interesting for some of you guys to just have some clarity about. So I'm sure most of you guys know that there is something going on in Wall Street, right? It's like the working class, retail investors versus, the MAGA, hedge fund guys who, have, billions billions of assets under management, and they have all these crazy financial instruments where they can do short selling and options and all that, right? And I think I just wanted to perhaps help to clarify um, what is happening and give you some sense of what the power dynamics is like at the moment. So just to give an example, I will just to clarify, certain terms that are just being thrown out there by news media and some bloggers and all that. And I just wanted to start there so that people can actually understand once I get into it. So there are certain words that have been, thrown out there that need some clarification. So one is short selling, one is short squeeze, right? And you have retail versus institutional investors, right? So I'll start with short selling. So short selling is actually a big institutional company, right? They go out there and they borrow stocks of a company that they think is going to fail. Maybe the fundamentals of the company are not well. So fundamentals of the company is like maybe the bottom line is not doing well. Like maybe the cost is rising in that company. They're losing customers based on a new disruption. Maybe technology has disrupted the company. And it's a brick and mortar company. There are certain infrastructural problems that, based on some analysis that these big hedge fund companies do, they realize that this company is going to fail, or they have this instinct or speculation that this company is going to fail. So they go out there and they borrow stocks of that company, right? And they take that borrowed stocks and sell it to another company, another financial firm, right, that deals with stocks, and they're into that type of interactions, right? Buying short sell stocks. They sell it to a company at that price, at the market price is, it's very comfortable because it hasn't dropped yet, right? And the speculation is that because the fundamentals of that company is not strong, eventually the prices drop, right? So once they sell it at a very comfortable price, right? So when it eventually drops, they'll take back those borrowed stocks and give it back to the owner, right? But no, it'll be at a lower price, right, than the price that they sold it. The borrowed price will be less than the price that they sold the borrowed stock initially pre-collapse, right? So there's a spread, right? Because the borrowed stock sold was at a high price, but once they sell the price of the stock drop and the lended it back to um, the people they borrowed it from, it was at a lower price, right? So that spread is what they make the profit out of it. So, and they do this a lot. Hedge fund managers do this a lot. The interesting thing with GameStop and what I'll call the short squeeze was that, a bunch of people came already passionate about this company called GameStop that, is into games and but it's a very high brick and mortar company. And with the internet, and you have games on your Facebook, you have apps that play games, like that disrupted the market of GameStop, right? Which is like a more brick and mortar kind of company with games, right? So what happened was that these passionate people on Reddit, which is most of you guys use Reddit, they came together and say, and it's a small group. It's called the Wall Street Betters, I think. They're Wall Street Bet, the big Wall Street Bet, and they came together and said, okay, we're gonna all agree to buy all of this stock almost at once, and that's what's called short squeeze. Because when they bought all the stock at once, because of demand and supply, the demand dropped, so the price went higher, right? Because they bought a lot of them, and because of that, the price went up. I think they did almost at once. That's called a short squeeze. The price went really up. There's a very big spike in it, right? And because these big hedge fund companies had short sold the stocks, it went contrary to the assumption, right? So they actually lost money, because for short selling, the company has to be underperforming than expected for you to make money, right? And the unfortunate thing about short selling is that if your speculation is against the trend of what actually happens, you can have infinite loss of money, because the price of the stock can go as high as it can go, right? I mean, the price of the stock can literally get, not just because right now it's $320, the last time I checked, but you can still keep on going up, right? So you're losing money indirectly, directly actually, because you short sold against them. But the only way to pay that money is from the borrowed stocks, right? Because the price now has dropped so much, and also the stocks are not even available, because the people have bought a lot of the stocks. The demand of the stocks, the supply of the stocks is less. So you can't even pay back, because you have borrowed. The way you have to pay back is through those borrowed stocks, right? Because a lot of people have gone into the market. A lot of these users went into the market and bought them, right? So that even makes it much more troublesome, right? One, the stock prices are going high. The stocks are not even as available as you might think, as you expected. So that you have two big problems, right? So that's why this hedge fund actually needed some support from another hedge fund, because some hedge fund came in to support them, but these Reddit users realized that, oh, you want to help them, so they actually bought more of the stock, and the price went higher to 320, which is what it is today. But so the concept is that short selling is a big thing for hedge fund managers to bet against companies that they think they're crumbling, or they have a speculation it's going to crumble. Short squeezing is buying stocks a lot within a short time, and the price of the stock spikes. And it's a very interesting financial activity that's been done a lot in Wall Street. And it's so interesting that, something that I learned in school was that, people in Wall Street are the wolves. Like they know the intricacies of how the financial system works. And it's just impossible to bet against it, especially if you're a retail investor. And I had to explain why that. Retail investors are people that are just like you and me, or small mom and pops, that we're just just, I don't say locals, but just like the regular folks on the street, who don't really are not really exposed to like the financial nuances, that, as you may say, right? At the same time, you have the institutional investors, like big companies like Goldman Sachs, Fidelity, that actually have the capacity and the volume to actually have access to even pension funds that send over some of this equity part of the pension fund to them, for them to actually invest and all that. So institutional investors are more like established large financial companies, and retail investors are people like me and you, right? So the interesting thing is, now there's a huge power dynamics going on in recently, of how what they call the working class retail investors can actually upend the power structure of how these hedge fund managers always have this say on how things are being done in the financial markets, in the capital market. So it's going to be interesting to see how this works. If you do have feedback, or you have your thoughts you want to share, please comment down below. I'll be happy to hear what you feel about what's going on, your reactions to what I said. I'm open to having more conversation about this, but this was very exciting. It's very interesting, and I think it's a very it's an inflection point to see how the future of short selling will be like, the future of how retail investors and how using platforms like Robinhood will affect the way trading is being done on a day-to-day basis. We'll see how things go. I think as of now, Robinhood has just let one GameStop trade per day or something like that. But it will be interesting to see the evolution of this, and I think it's worth watching and seeing how that goes. But happy to hear your thoughts. Happy to hear your reactions of this recent news, and I'm looking forward to sharing more finance related projects. We have there are some apps that I've been using recently that I'd love to share with you guys, specifically about finance and how to think, how to be financially savvy when you're on your day-to-day life. One I will just drop it here is Truebill. So app that can help you show how you spend regularly, and I'll get into that in another video. But thanks for stopping by. Leave a comment, and it'll be a pleasure to hear from you. Please feel free to subscribe, like, and also more than looking forward to hearing your comments moving forward. So thank you so much, and have a great weekend. Bye.